students. Today we'll be looking at Class 12 Accountancy, Chapter 1, Accounting for Not-for-Profit Organization. Meaning and concept of an NPO. NPO stands for Non-Profit Organizations. What is an NPO? Not-for-profit organizations refer to the organizations that are used for the welfare of the society and are set up as charitable institutions which function without any profit motive. These are used for the welfare of the society as charitable institutions. Not-for-profit organizations' main objective is to serve the society and its members and not to earn profits at all. Some of the examples of not-for-profit organizations are schools, colleges, and some government hospitals. Funds required for the activities of a not-for-profit organization are normally sourced by its members, trustees, etc. Since we know that this organization runs on a motive of non-profit, so it doesn't get any profit. So how does the organization run in long term? They run in long term because these organizations have some members or trustees which give some funds to the organization's development and growth and for day-to-day activities. So these members and trustees source funds into an NPO. Characteristics of NPO. Entity. Not-for-profit organization is a legal entity separate from its promoters. It is promoted by individuals. Purpose. Their purpose is to further cultural, educational, religious, professional objectives and rendering service to people at large. Their main purpose is rendering service to people at large. Ownership. It is set up as a charitable society or trust. It is set up by an individual or a group of individuals, but it is owned by the society. But it is set up by individuals or group of individuals, that is companies. Profit is not the objective. It is not run with profit-making objective. The profit earned is termed as surplus in an NPO. Surplus is very much necessary to maintain its assets and also its operations in the long run, as surplus provides enough funds when in demand. Financial statements. It prepares its financial statements every year, which includes receipts and payment account, income and expenditure account, and balance sheet. Funds. It is required for operations and it's given by its members and donors as entrance fee, membership fee, subscription, donations, or in any other ways. It is also supplemented by surplus from the operations when needed. Management. Not-for-profit organization is managed by a group of individuals, often called trustees or the managing committee set up in the particular not-for-profit organization. Let's look at some differences between profit and not-for-profit organization. Basis for comparison. Meaning. A profit organization is a legal entity which operates for earning profit for the owner and is known as for-profit or profit organization, whereas a non-profit organization is a legal entity which operates for serving the society as whole. So the main profit organization is some entity or organization formed by a single person, a single individual, or a group of individuals, but their main goal or their main motive is to earn profit. In the long run, their goal is to grow and expand and earn profit. Whereas not-for-profit organization solely depends on serving the society and helping the people in need. They are a part of the society which is very important for really needed people. Thus, it serves the society as a whole. Form of organization. A profit organization is either by sole proprietorship or it's a partnership firm or a company. Whereas a not-profit organization is usually a club, trust, public hospitals, society, or anything else. It can be any school, it can be any hospitals, it can be any public serving places like literary societies, or it could be anything. Management. A sole proprietor, partners, directors, as the case may be. In a profit organization, usually in sole proprietorship, the owner of the organization or the partners or the directors of the organization assigned will manage the organization. Whereas in a not-profit organization, usually trustees, committees, or governing bodies manage the organization. Since trustees are the people who put in fund into the organization, they usually take care of the managing part. Whereas in some NPOs, when those NPOs are so huge and vast, a specific set of individuals are assigned into committees or governing bodies who take care of the management part in the organization. Source of revenue. In a profit organization, their main source of revenue is sale of goods and services. Whereas in a non-profit organization, the trustees or the members of the organization make donations or subscriptions or membership fees, etc. into the organization, or even loans and grants from the government or institutions serve as a source of revenue here. Profit organization is commenced through the capital contributed by the owners. During the beginning of the organization or company, their owners put in some amount of capital and they keep putting in some capital amount at equal intervals into the organizations for its daily needs in commencement. Whereas in a not-for-profit organization, these funds that we receive from the members and trustees through donation, subscription, or government grant or any other way, these funds are used for day-to-day operations. In a not-profit organization, receipts and payment account, income and expenditure account, and balance sheet account are created as financial statements to look into them in the future. Whereas in a profit organization, since their main source of revenue is sale of goods and services, there is a continuous transaction happening between sale and purchase. Thus, income statement, balance sheet, and cash flow statement are some of the most important financial statements created in a profit organization. Money earned over and above. So the excess money earned. In a profit organization, the excess money earned is called as profit. It is transferred into the capital account of the owners or partners. Whereas in a not-for-profit organization, the excess money earned is called a surplus. It is transferred into capital fund. A capital fund will be used for future development purposes. Now let's look at the financial statements required for a not-for-profit organization. Not-for-profit organizations prepare annual or final accounts showing the financial transactions of the organization for its members and to comply with statutory requirements. Though financial statements for non-profit organization is not muchly needed because their main objective is not to earn profit. But still, we find financial statements play a really important role in these organizations because they still receive funds from their members or trustees or from government, what may be the source, they still receive funds which is used for day-to-day operations in the NPO. They need to make proper note of these transactions and the use of funds and the various ways in which the funds are getting spent in order to keep a proper eye and to reduce unnecessary expenses and to put in enough and sufficient amount of funds wherever needed. So these financial transactions of the organization will help its members to determine the future of the NPO, its needs and its demands, and also to comply with the statutory requirements. The financial statements for an NPO are receipts and payment account, income and expenditure account, balance sheet. In the next video, we'll look in detail about these three financial statements for a non-for-profit organization.